Okay, so we are live. Welcome to the Bitcoin Daily Show. We're interviewing Mr. Frank Doyle. He is one of our hosts on the Bitcoin Daily Show that runs 8 to 10 a.m. Eastern. He's mostly on the Saturday show, but joins us now and then. And so if you're not aware, the Bitcoin Daily Show runs every day, 8 to 10 on X. If you want to catch some great content by some fellow Bitcoiners, each show is different. Come join us on X, or you can re-listen to it if you miss out on it. And so what I'm doing here with these interviews is I'm interviewing a lot of the hosts and a lot of the speakers that come onto the show, just so we can learn a little bit more about them without all the background noise of a live show with all kind of speakers and listeners in the morning. So, Frank, welcome to the show, and maybe you can start by telling us how is it in Miami right now?
Well, it's damn hot. It's humid, and today is sunny, but we've been getting a lot of rain. I've only been here like a little less than a year. I came here back in August. I was in Ecuador for 5 years because my family, my wife, she's from Ecuador. So I've been in this area of South Miami since last August. So I haven't quite got through a full year of the variety of South Miami weather. But I really have to say that during like January, February, March, I was pleasantly surprised. The weather was really, really good because I came from a place in Ecuador. You know, Ecuador's on the equator, and I was in the lowlands, in the coastal areas, in a city called Guayaquil. And that is just 365, 24/7, hot, and humid. And it's extremely sunny. There's a rainy season down there, and it's like basically December to May, and then there's no rain. So the weather where I came from was very predictable. And like for me, like ironically, coming to South Miami was a little bit of a respite from extremely hot weather. So I'm okay. And I also did go to school down here. Maybe I'm skipping ahead a little bit. I went to University of Florida back in the day. I'll tell you how old I am. I went there when Emmitt Smith was the running back. So I remember calling up my brother Emmitt's freshman year after his first game, telling him, I think we have a really good running back here. He's kind of small, but he's really hard to tackle. And that was Emmitt's first, I think his first game, he got in halfway against University of Miami, and he did pretty well. And
that was an understatement.
Yeah, he wound up doing pretty well. So here I am. Of course, I'm a New York guy, born and bred, and so.
Well, maybe we can start there about your background. Just tell us, growing up, you had brothers, sisters, what your mom and dad do. Kind of take us back.
Yeah. I'm from a big Irish Catholic family from Long Island, which, that's, once you say that, there's like a certain cultural background that, you can kind of figure out right away. Long Island, New York, obviously. So I was 7 kids, 6 boys, 1 girl. Both parents very, pretty strict religiously. We all went to Catholic school. And my father was a teacher. So one thing that did have a big effect on all of us was in the summers, he would pile us all into a camper. So 7 kids and two parents, 9 people in a van. And then we pulled a trailer across the continental United States a couple of times. Now, I was very young in most of those trips, even before I was born. They started taking them in like the mid 60s up until the early 70s. But I was very used to going to other areas of the country and kind of seeing, those other subtle cultural differences, right? And I think that was a really good experience growing up, just to know, there's a lot of different types of people and different mentalities all over the country. And that was I had a very enjoyable childhood. I was the youngest, a lot of protection because I had older brothers. And I just had, it was that time where the parents, they would say, like in the summer especially, they'd be like, I don't want to see you inside the house. Get outside. I don't want to see you until dinner time. And then like it's funny because they would have public service announcements at that time that'd be like, it's 10 o'clock. Do you know where your children are? Like it was literally like the public, the public government would have to remind the parents that they actually had kids, as opposed to today, like everyone's helicopter parenting, right? So I'm Gen X, so
Yeah.
that kind of.
I grew up riding my bike to school, so a Catholic school as well down south, and then I went to an all boy Catholic school. But same thing, there were no helicopter parents back in our days. I think that's a more recent thing. They just kind of kicked us out, and we came back whenever we were allowed to.
And the biking was a big part of it, right? You take your bike to all parts of the town, different places to figure out where you can be Evel Knievel, and train tracks were not off limits. Anything. BB guns, and it was just a whole different world. You were shooting at your friends, it was all fun. Now in New York we had we had something called stickball, with an old broom handle and a tennis ball, and then you draw a strike zone on the back of a wall of the local school, like the grammar school. That was a particular New York game. You'd see stickball, wiffle ball, that sort of thing. A lot of playing in the street with the kids on the block, like to all hours of the night, and everyone would just pile into each other's houses. And it was just, it was a great era. I definitely enjoyed growing up in Long Island, big family. So that's kind of where I come from, culturally. And then, so being from a big family, a lot of my older siblings, for whatever reason, maybe part of it was because we did take all those camping trips. They wound up going to college out of state, pretty much all of my older brothers and sisters. So one went to California, one went to Texas. My sister went to Tulane, New Orleans, where you are. Another one went to University of North Carolina. Another one went to Duke. I wound up going to University of Florida. So we all kind of spread out all over the country. And, that was part of kind of my upbringing. We thought nothing of just getting up and going to a different part of the country. So but when I went to school in Florida, it took a couple of years to figure out what I was interested in. First, I did a little bit of music. As some of the people on the Bitcoin thing know, I'm really into music. It's a big thing for me. I play some guitar, playing a long time. But then after that, I quickly said, music, I can only really become a teacher with that, most likely. So I quickly switched to business and then eventually finance. And so being a New York guy, I'd go back to New York in the summers from University of Florida to do, to get a summer job, because it paid a lot better than whatever you could get in Florida. And I had some interesting jobs. One of them was actually working for it was a mafioso restaurant, basically. There's a restaurant in Ozone Park, Queens, called the Villa Russo. And this was the time of John Gotti. And it was totally Italian, like off the charts. Not too far from JFK, from where the airport is. And these guys would pull up in all these fancy cars, Ferraris and big-ass Cadillacs, the whole thing like you'd really, expect. And it turned out years later, it turned out that was one of like Gotti's favorite places. The guy that owned it was kind of basically, a made guy. And I was this Irish guy running around parking the cars. I was a valet parker. And
wow.
Yeah, it was a lot of fun. Like New York was a real blast. So I had summer jobs in between college doing stuff like that. But eventually, I wound up coming back to New York after I graduated and just started working in Wall Street type jobs. And, my first job out of college was with Standard & Poor's. Standard & Poor's rates. They do rating debt. They do a bunch of other things. Obviously, they have these indices where they track different portfolios of stocks, the S&P 500. So I worked there, and then I worked in a lot of different. Then I worked in a private equity company. I worked at something called a third-party mutual fund administrator, kind of like back office stuff. So I did like back office stuff. I did rating agency stuff. Then I worked a lot of time. I worked I worked for a lot of times. I worked for insurance companies, publicly traded insurance companies, reinsurance companies.
Can you
Um,
can you help? A lot of America doesn't understand the business culture or what's it like to work on Wall Street. Could you maybe try to give us a window of someone who's maybe never been to New York, never seen the financial juggernaut that New York is and Wall Street is? How would you describe that to someone who's never been there, never seen it, never worked in that industry?
well, yeah, it all kind of depends on what part of the business you're working in. So there's a couple of different parts. Like one big part is the back office type stuff, the bean counters, the accounting. And so a bunch of the jobs I had were like that, where you weren't making decisions about buying and selling stocks or securities. And those jobs are not quite as pressure filled, type A personality people per se. And then, private equity is not as. I mean, it all depends on the nature of the people you're working with, for sure, 100%. When I worked for this little private equity company, it was a pretty small shop, and it was funny because everyone I worked with was an Ivy League or MBA, except for me. My grad school was just that kind of a local city college in New York, but I was kind of the quant guy, the guy running models and all that sort of thing. And that was a very small shop. They were very bright guys, but it was dominated by the general partner. And so if he kind of liked you, your life was great. And I think that's true of kind of any job in a lot of ways. But there's no question the most pressure filled job by far is when you're kind of managing money that has live pricing all the time, like a hedge fund. And so when I worked at a hedge fund, um, from basically 2008 to 2012, that was the height of the great financial crisis. So just before I came in, uh, it was before Lehman Brothers, which was kind of the big uh, seminal event that really woke up Wall Street as to the amount of risk that the various investment banks were taking as it related to mortgage-backed securities. And so that time in particular, to your question, was very, very stressful for everybody, because even leading up before Lehman Brothers collapsed, there were a lot of cracks in the markets. Bear Stearns, like 6 months earlier, Bear Stearns was like one of the oldest, most venerable investment banks in the world. This is talking like 2007-ish, and they had dabbled a little too much in mortgage-backed securities. They had like a division where a couple of guys went a little rogue over investing and kind of juicing the books, almost lying about the valuation of what, there was deterioration in the value of those securities, and they were marking them better than the actual, what they could really sell them for in the market. And that was like the canary in the coal mine, Bear Stearns, this particular little fund in Bear Stearns. So, in that environment on Wall Street, you can't get any more stressful, because, as it turns out, some of these rogue divisions within a company can have the potential to take down the whole company if
Wow.
the risk management company doesn't have their arms around what every division is doing. And so after that you had a lot of the regulation come in, Sarbanes-Oxley, and where they made the CEO and the CFO of these Wall Street firms personally liable, responsible for whatever the auditors signed off on the books. And so, it brought in this huge culture of compliance to Wall Street. Not that it necessarily would totally get rid of the bad actors, because you're always going to have that, obviously. Because the thing about Wall Street is, whenever you have leverage, the ability to borrow and put a little money down on something and make a big bet, and if it pays off, you can make a lot of money. These people are basically betting with other people's money for the most part, in a way. And also at that time, the Wall Street banks always knew if they were to blow up and they were to have a really bad collapse in a certain division, they kind of knew in the back of their minds that the federal government, one way or the other, would bail them out because they were systematically important to the entire, so you got these classifications of the really big banks: Citibank, JP Morgan, Bank of America, Wells Fargo. Those five big banks, they're like what they call systematically important banks. And, the government and the regulators don't want those to fail because it could have a massive ripple effect throughout, because they're facilitating the raising of capital, borrowing of money, and issuing of new shares into the market that let a lot of the publicly traded companies especially fund new ventures and fund, buying other companies and all that sort of thing. So, a long-winded way, when you're in that part of the business, it's called like the front office or the buy side. The buy side are the hedge funds and the investment managers that are buying securities on behalf of their investors. You're sitting in front of a monitor, watching a portfolio or multiple portfolios potentially worth hundreds of millions or billions of dollars, and you're part of that team that has to manage that responsibly. And so when you have big sell-off days, and that's why Bitcoin in particular, for these, Wall Street has been slower to accept Bitcoin because they're trying to find a good way to hedge that volatility. Because if you get, it's great when you get the big, blow off, upside in Bitcoin, but when you get in that choppy area and you get into like what we just had recently, the big money managers getting comfortable with that unless they can find a way to hedge that.
Now, do you think? I noticed Bitcoin forces you to really think on a much longer cycle, and it seems like Wall Street thinks in the quarterly cycle,
Yeah,
annually cycle. So, does that ever get decoupled to where?
yeah, that's a really good point. There's no doubt that when you're trading publicly traded securities that are required to report their earnings every 3 months, that it's very difficult to trade. In this case, you could an investment manager could buy what they call proxies for Bitcoin, which like mining stocks, MicroStrategy, Coinbase. So there's a number of publicly traded companies. The biggest one is Coinbase, actually. Coinbase is actually bigger from a market cap perspective than MicroStrategy. So they're more likely, the bigger hedge funds and the bigger investment managers are more likely to trade Coinbase and MicroStrategy because they have a bigger market cap, because they have more liquidity. And the miners, they're like $1 billion to $5 billion market cap, somewhere in there. So they're not and they're much more volatile. The miners are much more volatile.
Is that just because of their size in a market that's trading, much larger volumes? They just need a bigger boat, a bigger market cap to trade on.
Yeah, that if you're trading billions of dollars, there's you can't trade a really small market cap company because you won't get enough. It won't affect your returns enough if it's too small. If the company is because you can't take enough of a position. If you take too big a position, you'll own too big a piece of the company in a small. But $1 billion to $1.5 billion is actually big enough for most investment managers to dip their toe in, But like the really big hedge funds, they're just too big to invest in the smaller minor type companies, because they would just move the price of the stock around too much.
So where is MicroStrategy sitting right now? It's above 20 billion, isn't it?
Yeah, I think that's definitely healthy enough for most investment managers to get involved. So there's no problem with MicroStrategy or Coinbase to get involved in the market.
Yeah. What's Coinbase sitting at nowadays?
I think it's somewhere over 40 billion-ish in that. We've had this drawback, right? So when Bitcoin, these things are very correlated to the price of Bitcoin.
Sure.
Bitcoin goes down. So, but it's about double the size of MicroStrategy, and it's kind of the plumbing. it's more of a, it's not quite as correlated because they have non-Bitcoin related stuff, but even all the other stuff they're doing is a derivative of Bitcoin essentially.
Yeah, it follows the market.
But they like, I think Wall Street is a little bit more comfortable with a stock like that only because it's like the plumbing. In other words, it's where the people go to trade, and then developers are now going on their new. They have a new layer 2 or whatever base. They have this new, basically blockchain. I think base, the Coinbase's base is where developers can go and build applications that ultimately settle down, I think, to Ethereum. Don't hold me to it. Mm-hmm. So the point is they have a lot of different businesses within Coinbase beyond just an exchange where people go and buy and sell Bitcoin and obviously altcoins. They have other things to do there.
Do you see that MicroStrategy is more of a holding company?
Yeah, it's a pure play. MicroStrategy is basically a Bitcoin ETF. It's another Bitcoin ETF with the ability to leverage, because they can without going into too much. They can raise equity. They can borrow it. They've been successful borrowing at pretty low rates, and they've also do these what's called convertible preferreds. They have different ways to raise money to where when they buy Bitcoin, should Bitcoin keep going, generally in the direction, an upward direction, they can kind of get more bang for the buck than if you or I just went out and bought Bitcoin straight up. There's an aspect of leverage when you borrow money to buy an asset. You can get leverage on that, and it amplifies your returns, and that's a good thing so long as you can service the debt on that, and you are careful about how you structure the maturities. When I borrow $1 billion and it'll be due 2 years from now, and maybe the next billion I borrow will be due 2 years after that. You got to what's called stagger your maturities to make sure not all the principal that you're borrowing is coming due at the same time. And if that coincides with a dip in the Bitcoin market, that would be a real disaster for MicroStrategy. So, and I think they've been pretty good about that, staggering the maturities and stuff like that.
What do they do? Do they stagger it at least over a 5-year period?
Yeah, they stagger them at least 2 years apart. And they don't over-lever. I'd have to look at what their debt-to-equity ratio is. I don't know it off the top of my head. But Michael Saylor is very mindful of that, like not putting himself in a position where he'll get completely blown out of his Bitcoin. So, but it's something as an investor that you need to look at. You need to make sure that they're being responsible, how they're borrowing money, what rates they're borrowing, and when that money is due. So far he's okay. His average price for Bitcoin is in like 36,000 to 39,000. And, we're in the mid 50s or whatever. He's comfortably over that. And, most of us think that going down that far again is not a high probability. Anything's possible, but he's in a relatively comfortable position right now. So, but,
it's going to get really exciting after this next blow off top to see where he's at. Of course, that correction is going to be brutal, but
yeah. So I think he's thought ahead to that, and he should be able to handle it based on what he's done. So
yeah. So tell us, if you don't mind, a little bit about. So what are you working on now, or maybe what brought you? Let's share that part of your background. So, how did you discover Bitcoin? What was your journey into that? Coming from a Wall Street background.
Yeah. So the first time it really hit me was, I think, when a lot of people noticed back. I think it was late 2017. Bitcoin had that epic run. And at that time, I was working in a boring old insurance company, something called a municipal bond insurance company. But it was all a buzz. Everyone was aware that Bitcoin went from whatever it did up until like almost 20,000. And it was the talk of Wall Street. There's no doubt about it. And true to form, most people myself included, we didn't do a deep dive at the time. And, I worked with some very quantitative type people, actuarial people, and that mindset of like, uh, an asset is worth its discounted future cash flows. And, people would always say, well, Bitcoin doesn't have any cash flow. It's just a greater fool theory. It's a tulip bubble. People they didn't have the foresight, or really didn't have the inquisitiveness to really dig deep into that it would, that a network, a decentralized network, could have tremendous intrinsic value. At that time, though, the network wasn't as robust, obviously, as it is today. The number of nodes, the number of wallets, and all that, those things that make, and the hash rate and all that. But it was on Wall Street at the time that I was, first aware in late 2017. And this is just one, this is my situation. I can't speak to everybody who was in Wall Street at the time, but most people dismissed it because it just didn't have cash flow. But it did pique my interest. I'm like most Bitcoiners, I think I fall into that category of people that is, I'm very, I'm very curious and very inquisitive, especially if I find something has like a math basis to it, and I'm not a math genius by any stretch, but I've spent a lot of my time on the quantitative side of modeling and working with actuaries and the real quants. And so I knew that there was something mathematical backing it, and it took me a couple of years though. The first time I actually bought any was about a year later in June of 2018. I just dipped my toe in very lightly. And of course, I bought Bitcoin, a little Bitcoin and a little Ethereum. And, like we all did, I played around with the old coins. But obviously now I've come to the conclusion that, the decentralized proof of work and fixed supply is the fundamental basis for the value of that asset. And all the other altcoins, they don't have, that fundamental fixed supply required proof of work. There are still some altcoins that have proof of work, but they're basically meme coins. Maybe some are not, but
Yeah, and they don't have quite not even close to the liquidity that Bitcoin has. It's got
yeah,
that first mover advantage, and basically you're buying scarcity, like you said.
yes,
Is very attractive to the financial markets that are coming in. They're looking for to your earlier point, aren't they looking for the big ship, the large liquidity to kind of mitigate some of that risk?
yes. So again, one of the biggest stumbling blocks for them, they like the size is great. The $1 trillion size is fine for most participants, and we're clearly seeing that with the ETFs. A lot of there was, after the first 3 months that the ETFs traded, the publicly traded companies that bought the ETF had to disclose. It's part of the regulations. You have to disclose all your holdings, kind of 90 days after the fact. And so there was about, it came out somewhere, I think it was 10 to 20% of all the buyers of the ETFs were some of the biggest hedge funds. Now, it turns out the biggest hedge fund that bought was this one called Millennium. And they're a pretty big company. I don't want to misquote, but they're tens of billions. They manage tens of billions, if not like 100 billion, over 100 billion in assets. And they bought a little under 2 billion. They bought some of the BlackRock ETF and some of the Fidelity. And I think it came out later. I think everyone is pretty much on board that part of their strategy probably was to do this thing called this basis trade, this carry trade that we talked about. So, but before I get into that, so the idea that Wall Street would be interested in the ETF and or owning a piece of Bitcoin, and we know that it's not the pure form, and we can get to that later. The ETF is like I often say, it's somewhat antithetical. You're kind of re-centralizing, and it's being custodied at third parties and all that. But putting that on aside for a second, having a big hedge fund like Millennium buy that much of the ETF is a big deal in Wall Street. But it turns out that they were basically, from best we can tell, from a lot of the guys that analyze this, that I follow very closely, they were using a good chunk of that probably to be the spot side of what's called a basis trade, where you can sell the futures Bitcoin. Let's say the futures Bitcoin, it's just to make round numbers, is selling at $70,000, and you can buy spot at $65,000. And so the expiration of that futures is, whatever. Let's just say it's a month ahead or whatever it might be. If you own the same amount of spot as you're selling in the futures, then you're completely covered on your trade, and you can just lock in the difference between those two prices. And that's the type of, so it was a little bit misleading to say, well, these big Wall Street firms are on board with the idea of the decentralized ledger, the proof of work. Some of them may have just been playing this arbitrage game between the spot and the futures called the carry trade. And it's not necessarily indicative that this giant hedge fund that is very respected on Wall Street has now, they've been orange pilled, so to speak. We don't necessarily know whether they were orange pilled or they're just, trying to play traditional hedge fund games. And so to me, the jury's still a little bit out. We're still definitely early in Wall Street adoption, but there are good signs that there's quite a few investment managers that have bought. And then we've also talked, one of the biggest deals really was when, I think it was Wisconsin, the state of Wisconsin bought some Bitcoin, their state pension. That's a really big deal, because Wall Street, a lot of investment managers get investment dollars from pension funds. And so if Wall Street and investment managers see pension managers are starting to allocate a little bit to Bitcoin, it kind of gives them the okay also, when their own clients on their own are grabbing a little sats. It definitely raises eyebrows on Wall Street. So
now, was that did they actually buy Bitcoin or they bought the ETF?
That's a good question.
I thought they bought actual Bitcoin, but I did not.
I have to look. I'm trying to remember whether they. I don't recall whether they did or not.
Yeah.
In either case, though, the fact that they bought a decent amount. I forget how much. It wasn't a huge amount, but it was enough to raise eyebrows.
153 million was the number I read.
Yeah, they're one of the top 10 biggest state pension funds in the country. So it's a big fish that came to the table, and as you just have it takes that first couple of prominent, well-known either hedge funds or pension managers, because that's where all the money is on Wall Street. That's one of the things maybe people don't follow investing that closely. There's just such huge buckets of cash being invested with pension funds. I mean, if you think like public pension funds are, they're contributing, all those workers that work, firemen, police officers, teachers, government workers. I mean, there's just hundreds of billions, actually trillions of dollars, if you think about it, invested in pension funds. And then the guys the people that manage those funds, they have to allocate. Generally, they'll allocate to stocks and bonds, and a little bit to commodity, maybe a little gold, maybe a little thing, and then they have this other little bucket they'll contribute to called alternatives. And when a pension fund is allocating to alternatives, they're usually talking about they're basically taking some of their portfolio money and investing it with a hedge fund, basically. This is usually less than 5%. So if you have a state pension fund that manages 100 billion, they might give like 1 or 2 billion to alternative investors,
Yeah.
investment matter, and so then I guess and then you also have people that just work regular jobs that have 401ks that are contributing to their 401k plans. They're given like a menu of different. Generally speaking, you're given when you work in a regular job that allows you to contribute to your 401k, where they'll match. A lot of times your employer will match, right? They'll give you a menu and they'll be administering. Let's say Bank of America is administering the 401k plan for your company. They'll just give you a menu of these basically ETFs and mutual funds that you pick. And most people just pick the Standard & Poor's. They just go, put most of my monthly 401k into the Standard & Poor's index. And because number one, when you do that, the fee they charge on those simple, just basic putting of money into an S&P index, the fee on that is very low, way lower, generally lower than 1%. And it's going to be too hard for the average person to get cute and be like, let's put it in a super technology growth fund where the companies don't have a lot of earnings, but they have a lot of upside if their products wind up being massively adopted. Most people in the 401k tend to be conservative, and they just put it in like what's called a 60-40 portfolio, 60% stocks, 40% bonds. And as they get older and closer to retirement, they allocate more to bonds because theoretically, bonds should be less risky. But over the last few years, bonds have been very risky because interest rates have gone up a lot lately.
Yeah.
But back to the main point
so that we know the numbers, the Wisconsin pension fund, if my memory serves me right, was 160 billion in funds under management. They put about 150 billion into Bitcoin, which is a tenth of 1%.
Yes. Yeah.
And this is kind of a toe dipping for them, but that's a big.
It's a signal, though. Yeah, it's a big signal.
And they're the first, I think, in America.
Well, there are some really small little, like, I think there's like a firefighters.
But as a state.
In like San Diego or something. Yeah, as a state. I think you're right about a state. Yes.
Yeah.
Yeah.
This is obviously there's 49 others that could follow suit.
Yeah.
And then that might also free up even other nations, even the federal governments to do.
Yeah. Yeah. So now you have, I think, what's really been amazing over the last 6 months or so, especially since the ETFs, it's really raised the awareness in the general public, and also in the corridors of the state governments and the federal government, Congress, and presidential candidates. I mean, there's so much more discussion about Bitcoin. It's really incredible how much airtime. And now even the business channels, they're spending a considerable amount of talk and time on Bitcoin. Like there's different, Anthony Pompliano and Mike Novogratz, and there's a couple other guys that are like just basically regulars on CNBC, Fox News, Fox Business. And so Wall Street is starting to incorporate as part of their coverage the I should say the business shows that are, when you go into an investment manager's office, in the background is CNBC most of the time, Bloomberg, Bloomberg TV. So all of these business outlets that cover the markets, they all dedicate significantly more time to Bitcoin lately than ever before. So we're just constant with, the penetration, the awareness, the adoption, it just keeps growing and growing. And when you have guys like Larry Fink in particular, he's an absolute thought leader on Wall Street. And when he crossed the Rubicon last June and signaled that he was going to file for a Bitcoin ETF, that really greenlighted the idea or the possibility that there's something really here. There's a real asset there. It's not just some Ponzi scheme, tulip bulb bubble thing. He followed that up with going on various business news channels and saying it's a global asset, it's a store of value, digital gold. Whether or not you like these terms or not, the fact that the one of, if not the most prominent Wall Street guy is touting the virtues of Bitcoin is just unbelievable.
Yeah, I think essentially any news is good news, even if it's slightly off. The fact that they're talking about it is heading in the right direction.
Yeah, I mean, we're hopeful that eventually they get down to the level of discussion on proof of work that someone like a Jack Mallers will do at a conference, and the time stamping and the irreversibility, and the SHA-256 and all that good stuff that we love and we know that protects the network and the distribution of the nodes and the miners, the difficulty factor adjustment, all that great stuff. I do think once Wall Street gets down the road there, they're going to find that there is a robustness and a trustworthiness to that asset. It just, the amount of electricity, the amount of computational power being deployed to protect the integrity of the network and all of the addresses that hold the various amounts of Bitcoin at those addresses being protected by this unbelievably powerful network has massive intrinsic value. And I think Wall Street will get there. They're going to get there. Some people just get there faster than others.
Yeah.
But, it's probably better over the long run that it kind of gradually just grows, because as we talk about a lot, we do want it to be inclusive of people who are not, let some of the plebs get their hands on the sats before it gets way out of reach. So I think the pace at which Bitcoin is being adopted on Wall Street, I think is helpful to the average person rather than all of Wall Street taking over.
I think you're right on that. So what are you working on now? Maybe, I don't know what you do day to day. I know you have quite the background, and now you're in Miami.
Yeah.
So how do you deploy all of this Bitcoin knowledge now, with in addition to all your Wall Street analytics, quantitative,
Yeah.
analytic, how do those backgrounds merge day to day?
I consult with one of those hedge funds, and I'm what you call a fundamental analyst. Basically, someone that will look at a company's financial statements and try to figure out, based on their history, what industry they're in, and what management is talking about every 3 months when they do their earnings calls. Try to figure out the direction of the earnings of a company, a publicly traded company. And you try to figure out if everyone else on Wall Street who's looking at that same stock, what their price target on that stock is today versus what you think, whether that average price target that Wall Street has, let's say on NVIDIA, I have to look. NVIDIA is like 140, I don't know what it is, somewhere between $120 and $160, whatever it might be. And so there's a whole bunch of guys, analysts that work at the big investment banks that follow the company, and they build these earnings models out into the future, and they try to project how much money NVIDIA is going to make over the next 5 years, let's say. And they do these various techniques, valuation techniques, to figure out, well, if they're going to make this much earnings over the next 5 years, what does that translate into a price today, a present value? What's the present value of the company today? And right now, NVIDIA's worth around $3 trillion. Microsoft's worth over 3 trillion and Apple's worth over 3 trillion. And so that's kind of my basic job, is following stocks that the portfolio manager that I work with and the other guys on the team, following the stocks that they've invested in, keeping up on all the news, and maintaining these models, these earnings models, and building models, and also occasionally recommending, a stock, coming up with a trade idea. It just means like, oh, let's look at this stock. Now, I can't talk about any stocks that we're involved in, but that position on Wall Street is called either a fundamental analyst, a research analyst, a stock analyst, that sort of thing. And so
I got a question for you. So if Bitcoin goes from 1 trillion to 3 trillion in whatever length of time, or say 2 trillion over this next cycle, maybe in the next 12 months, what does that do to the $3 trillion companies you just mentioned in NVIDIA, Apple, and Microsoft? But because Bitcoin's not a team, a company, it is quite a different animal from an investment standpoint. It's almost like
yeah, it's a great question. It could theoretically draw some investment capital if it has a really robust run up, and we get to I think when we get to 100,000, I think Wall Street's really going to start paying attention, and then retail, kind of the regular plebs, as we call them, the plebs are going to, because up until now, this run that we've had, not as many individual retail investors have participated in Bitcoin as we would have thought. They're still not to the 2021 fever that we had. But keep in mind, remember that 2021 fever was subsidized by everyone getting checks from the government. So we have to be careful without drawing too many conclusions about what might happen with retail going crazy into Bitcoin again. But if in fact the economy sputters and there's a recession, initially everything's going to probably go down, stock market and Bitcoin, because just as people get laid off, they just don't have as much discretionary income, and then the corporations and the investment managers, they tend to pull back and just wait for the dust to settle before they redeploy capital during recessions. So they figure out, well, where is the money flowing? And they tend to get very defensive in a recession, and they'll deploy capital to things like consumer staple stocks, things like that, utilities. But the government's response to that recession is going to be printing money and possibly mailing checks, and that's where you'll have a reignition, most likely, that increase in liquidity. A lot of it will probably flow into Bitcoin again. Many people that follow that macro cycle of liquidity definitely feel that there's a very high correlation between institutions and retail buying Bitcoin and the amount of liquidity. And there are a lot of people that follow those liquidity measures very closely. And we're just liquidity has been really going down until the last, say, 6 months or so. And it's just starting to curve back up, where central banks and governments are starting to get a little bit more, deploying a little bit more, pushing a little bit more liquidity into the markets, because countries around the world are getting a little weaker and weaker. China, Japan, Europe, their growth is not very great, not very good lately. So when after we start to come out of recession, even before, when they start to deploy that liquidity and Bitcoin starts heading hopefully over north of 100,000, you will see Wall Street paying a lot more attention. And to your question about how will it affect the largest companies in the world like Microsoft and Apple, when Bitcoin begins to grow its market value, on a level playing field, we're at a little over $1 trillion now. It's interesting that you say that, because there's a very famous chart that you can get on the internet that lists the largest market cap assets, basically public stocks, and they list the top 100. And it's like Microsoft, Apple, Nvidia, Google, Saudi Aramco is the oil company out of Saudi. It's a publicly traded company now. And then like Meta or Facebook, and then maybe one other stock, I can't remember, and then Bitcoin. Bitcoin's like in the top 10. And whenever I try, in a lot of my orange pilling moments with colleagues, I'll show them that chart, because a lot of them probably aren't aware. Bitcoin is coming up into the top 10 largest tradable, investable assets in the world. I mean, technically it's a commodity. It's not a publicly traded stock, but I like to show that chart, and it's interesting that you pointed that out, because I think as they see that rise through the rankings and overtake Meta, then it overtakes Google or Amazon, that really is going to raise eyebrows, and it's starting to raise eyebrows on Wall Street. And
now, what about? I noticed that there's two different investment buckets. You've got this number go up, high risk capital. It's looking for growth, and I think that's what has predominantly invested into Bitcoin. But now you seem to have this new narrative that Larry Fink highlighted that says this is a flight to safety. This is your safe bet. This is something that can't be messed up by a CEO dying if he's the key man, or some other disruptive technology coming along. What do those two buckets look like? How has this changed things as the narrative shifts from, hey, this is some high growth stuff, if you don't put your money in it, you could miss out on a good opportunity, to the world going to hell and Bitcoin's your safety raft?
Yeah, it's interesting because for a while, so investment managers like to look at assets, how they behave in a portfolio together. And they like to find things that can offset each other during different times in the market. And those are correlations, right? And so what Wall Street is starting to wake up to is, sometimes Bitcoin acts like a high-tech growth stock, and sometimes, it'll act like a flight to safety. Now, back when there was a regional bank crisis back last March in 2023, where someone like Kathy Wood likes to point out that when Silicon Valley Bank ran into all its troubles, Bitcoin went, it went from something like 19,000 to it went up like $10,000, somewhere in that range. And that, she likes to say, and my jury's still out on this, because you need more than one or two incidents where it did act as a flight to safety. But in that case, when the market called into question the safety of the fundamental safety of the banking system, particularly the regional banks, the smaller banks, or the mid-sized banks, we can call them, it was pretty eyebrow raising that there was a flight. We don't know whether it was causational or just coincidental, right? But so if Bitcoin acts more independently than the stock market, and it's definitely done that the last 3 months, because it's been kind of going down, right, while the big tech stocks have been going up. There's actually a bifurcation in the stock market itself, where pretty much all the returns this year in the stock market are due to the top 6-7 stocks, and the other 493 stocks in the S&P 500 are kind of going sideways and slightly down. So and a lot of that has to do with deployment of capital into AI. just there's so much money that's now being deployed, and the beneficiaries and the companies driving that are the Microsofts, the Googles, the Amazon, because they're building all that infrastructure. And so that's kind of why all the money in Wall Street seems to be moving there. And ironically, those companies, while they're high-tech companies, they're also considered a flight to safety, a lot of times. They're so big. They have so many well-established business lines, and we all use their products. Like, we can't get through our day without using products from those companies, that those are also considered flight to safeties. But as these Wall Street becomes more aware that Bitcoin is less and less correlated to traditional stock market, they do like that, and they do want to incorporate that. It's this thing where they call, an uncorrelated asset. So long as the uncorrelated asset over the long period is trending upwards and the price is appreciating, that's a really good thing. And Bitcoin is doing that. But it still does have quite a bit of volatility compared to most stocks. And over time, though, as Bitcoin becomes more and more adopted, as it grows bigger and bigger, the volatility gets dampened. So you'll see Wall Street come to it even more and more the bigger and bigger it gets. And that'll be a self-fulfilling prophecy, because they'll be more and more comfortable investing in it as the volatility dampens. There'll be guys on the edges that like the volatility that will try to exploit it, but that's a minority of Wall Street guys that do that. Something that's really, really interesting. If MicroStrategy gets incorporated into this S&P 500 index, and generally it's big enough now with a 20 billion market cap, it's bigger than a bit, probably 50 to 100 other companies that are in the S&P
that are already there.
Okay. There's a couple other technical qualifications it needs to have. I think you need to have a certain number of consecutive quarters of profitability, of positive earnings, positive net income. I think that's one of them. And they keep reporting negative earnings because they're carrying their Bitcoin under the old accounting methodology as an indefinite intangible. I don't want to get into it, but let's just, without getting into that, we have limited time. But if MicroStrategy were to be incorporated into the S&P 500, and because it has 220,000 approximate Bitcoin, which is worth $10 to $12 billion, at that point, effectively, anyone invested in the S&P 500 owns Bitcoin.
Right.
And that is just a huge, huge swath of people. I mean, there's all those people, just passively contributing to their 401k every month. They're buying Bitcoin. And there's a lot of indexes and ETFs that must replicate they have to buy all the stocks that are in the S&P 500 in the proportion that they're in they have to buy all the components. So there's a lot of ETFs. One of the biggest ETFs in the world is the SPY, and it has like $500 billion of investment in it. And it's just an index or an ETF that just buys all the stocks in the S&P 500 so that people can easily just go one place, buy that SPY ETF, and have the returns and the risk profile of the S&P 500. And once MicroStrategy gets slotted in there, it's just the amount of money that will have to, continually buy MicroStrategy stock. And since Michael Saylor is going to continually buy Bitcoin forever, you have this virtual cycle. And so that's going to be really fascinating.
And for those that don't know, the S&P, is it the Fortune 500 they call it? Is that
no? They call it the S&P 500.
Okay, so that's a $550 trillion bucket of money, investment money, that comes towards that. At least that's what I Googled it. If you look at all collectively, the size of
the market cap, It's in the tens of trillions, no doubt. Tens of trillions, no doubt. Yeah, it's very, very big.
And so he would be getting a percentage of that roughly based on what his market cap is in proportion to the whole market cap
Yes.
of all of
Yeah,
it.
that's right. That's right. So if MicroStrategy represented 2%, it wouldn't be that high probably. But if MicroStrategy represented 2% of the S&P 500, all the people 401k into the various S&P 500 indexes and ETF products, they would all, be buying 2% of all that money would be basically going into MicroStrategy.
Let me look that up real quick. So what would we look up? Market cap of the S&P 500?
Yeah, look that up.
So if he got 2%, so he could potentially be allocated with just 1% of that. Yeah, so it's 40 trillion, 44 trillion.
Okay, so 1% of that would be 440 billion.
Yeah. And that would be coming in at the margins.
Yeah, be careful doing this type of thing, but
right.
Somewhere, it's the general idea as the S&P 500, as the investment dollars flow more into the S&P 500 indexes, mutual funds, ETFs, investment products that replicate the stocks that are in that. It's just an unbelievable tailwind for Bitcoin buying. It really is. It'll be interesting to see as it becomes more apparent to the investing market that MicroStrategy would get included over the next couple of months or whatever. I'm not saying whenever that may be. I think you will see MicroStrategy people start really piling into the stock ahead of that because they'll realize, it's just So we'll see, and as kind of fundamental Bitcoiners like you and I are, it's not the optimal way to invest in Bitcoin for the world. And our hope, people like us, our hope is that people take the time to, investigate further and understand the true nature of the decentralized network of Bitcoin and the freedom. You and I love when you talk about the freedom aspect of it. Right. And the property rights. I can't echo those sentiments stronger. I just love it. And that's what really draws me to it more than anything. The thing that really gets me, and Michael Saylor talks about this, when you think about people in those those smaller countries in Argentina, Lebanon, Turkey, Venezuela, think about those hardworking people that work their whole life and save their money in those local currencies, the Argentinian peso. Someone's grandfather that worked their whole life, they made this nest egg in denominated in Argentinian pesos. And then overnight the government cuts the exchange rate in half, and he and all his descendants or whatever just get wiped out, and it's just so evil and tragic, and all that sweat equity for decades that a human being puts into trying to save the accumulation of all their effort and all their labor so that they could put something aside for their family. It's so unconscionable that is allowed to persist in society. And now, God willing, for as long as our families, and generations, that maybe Bitcoin, and hopefully Bitcoin can be a solution that these politicians and these bureaucrats can't destroy what we've saved and built up, in love for our family and all that, it's just, that's what really, it's not the number go up. It's that savings technology part of it that allows intergenerational, taking care. I have a different opinion about whether you want to pass down millions upon millions of dollars to your kids. I don't think that's a good idea. But I think maybe passing down the family house or, certain things,
Well, it's your right to choose where you want it to go and it not
yeah.
be stolen from you. Well, I wanted to wrap things up here since we're about the 1 hour mark. We really need to do this again because there's so many things I want to ask you. And I've also got some mic problems I've got to figure out. But are there any last words you'd like to share with the group before we close things out?
Well, yeah, I would like to talk a little bit. The other thing that I really love about Bitcoin is the community. And I've learned that, and I've had such an unbelievable collegial great time with all the guys from the Daily Bitcoin Show and all the other people, all the kind of, named people in the community, is the Scott Melkers and the Dan Tapieros and the Mike Novogratz and the Michael Saylors and the Caitlin Longs. And I mean, all of these people, there's something about this community. We're all on the same, a lot of us are all on the same wavelength. And it's like wanting the best for everybody, especially the little guy, wanting to propagate the freedom money, the freedom ideology, the self-sovereign concept to all especially to the places where people are unbanked. Those people that can't even, they have no control over their financial, wherewithal because they're just in very badly run countries. And I love how the ethos of all these people that are in this community are looking out for the little guy. And we're not all greedy Wall Street mongers. And that's the thing it keeps me here. It keeps me enthusiastic. And it just gives me so much hope. Like what's his name? Saylor says Bitcoin is hope. And that's the thing that I never want to lose that. And I want to just propagate that, forever. And that's why I do this. I love it. I love the people. I love you guys. And I want to help people, so.
Yeah, I love that message too. That's why I'm here. So we're going to keep this thing going. Well, Frank, great interviewing you. I want to do this again. And hopefully maybe in the future we can get a date and constantly. And if you want to see more of Frank, he's here every Saturday with TJ on the Bitcoin Daily Show. So
thank you so much. Yeah.
Close it out then. And hopefully we'll see y'all tomorrow at 8 o'clock.
Great.
Thanks.
Take care, Craig. Thank you very much. Take care.